Good morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. We all are in our festive wear today. So season's greetings to all our viewers, and we will be celebrating through the course of the day. But as we always do, we have to take a look at the global markets. And first up, the Asian markets, of course, they are largely mixed in trade today after a weak handover that they received from the Wall Street. So if we look at the indices, something like a Hang Seng is in the red as we speak, is in the green as we speak. That one is up 0.1%. Taiwanese index, however, is seeing some cuts. That one is down 0.4%. Nikkei too, after the yen hit 150 to the dollar, that is the lowest level seen in a long time. That one is down 0.2%. Kospi too is in the red right now. As a result of all of this, the SGX Nifty is indicating the start for our own markets will be in the red. It has recovered a tad bit from the lows, but still the indication is of a start in the red, down 22 points as we speak. In the US markets, Wall Street ended yesterday's trading session lower, with the Dow Jones falling 0.3%. S&P 500 was the day's biggest loser, falling 0.8%, while the tech-heavy Nasdaq ended 0.5% lower. All key indices fell in a volatile session as investors digested earnings and the movement in the bond market as the 10-year Treasury yield fell further, remaining at the highest level in 14 years. In fact, on that note, let's also listen to what Morgan Stanley's Brian Weinstein had to say on the Fed and the market reaction.
I think there's a couple things to worry about. One is obviously the Fed, right? They're on a mission. They want to tighten financial conditions. They don't want a big rally, so you don't have any tailwinds coming for you. They may slow down the pace of tightening, which could be one coming. Going 75 basis points a meeting is too fast. It's too much. They've caught up as much as they need to. They're going to get close to that rate by the end of the year, and they have to get the markets ready for a slower pace. They want to do that without convincing the markets they're going to ease or pivot. So they need to stay hawkish and slow down. I think the markets will overreact to that, but I do think it is one of the next big things to watch for.
Okay, that is about the US markets, but on to some important political updates. British Prime Minister Liz Truss has resigned after only 45 days in office, making her the shortest serving Prime Minister in the history of United Kingdom. Her resignation comes after weeks of turbulence in which her mini budget roiled the markets, 2 ministers left their offices, and her acceptability took a beating. In her address, Truss said that she could not deliver the mandate on which she was elected by the Conservative Party. Her resignation comes only a day after she told the Parliament that she was a fighter and not a quitter. The opposition parties have called for a general election now.
Mr. Speaker, I am a fighter and not a quitter. In the national interest to make sure that we have economic stability. I recognise, though, given the situation, I cannot deliver the mandate on which I was elected by the Conservative Party. I have therefore spoken to His Majesty the King to notify him that I am resigning as leader of the Conservative Party.
Okay, that is a big political update globally, and reacting to Liz Truss' resignation as UK Prime Minister, European markets staged a sharp rebound after stocks slipped in early trade. The stock 600 and FTSE finished 0.3% higher, the French CAC closed up 0.7%, and the German DAX was higher by around 0.2%. Now, the British pound too rose against the dollar after Truss announced her resignation. It later paired gains and larger global uncertainty. The moves come after 6 weeks of political turbulence amid historic tax cuts announced by Truss that sent European markets into a turmoil. Okay, that's the global market action. A lot has happened overnight. Of course, that will have an impact on our own markets as well. So to tell you just that, we have a research team joining in with what the trade setup looks like, the stock that are likely to be in the news, and the action from the F&O space as well. Hi guys, a very good morning to all of you, and festive greetings as well. But Vivek, let me come across to you first. What is the market setup looking like today?
Well, good morning. We are actually looking at a very mixed set of cues. Globally, the handover hasn't been very good. US markets, like you mentioned, have closed lower, and the US Treasury yield continues to gain strength at a 14-year high. European markets, a very volatile trading session, especially UK markets, after the shock resignation of the PM. So that, despite that, European markets managed to end on a strong footing. When you're talking about gold prices were little changed, so some stability after a 2-day volatile move as far as gold prices were concerned. Crude oil prices, again, flat to marginally higher. You actually saw WTI futures end higher by around 0.5%, and Brent futures too were marginally up in the session. When you're talking about the Indian markets, Q2 results, whole host of results that came post-market hours yesterday, markets will react to that, and also some very big and large cap Nifty names with a lot of weightage as far as the Nifty is concerned will also deliver results today. Reliance Industries, Hindustan Unilever, Bajaj Finserv, JSW Steel, Ambuja. These are some of the stocks to keep on the radar on the back of results today. Remember, the rupee is another worry as far as Indian markets are concerned. It will be important to track, how the rupee moves. And also, when you're talking about Asian markets have seen a slight rebound as far as the trading session is concerned. But LGX Nifty at this point of time is indicating a minor downtick as far as the Indian market open is concerned.
Oh yes, Vivek, thank you so much for all those cues. Surbhi is joining us now to list out all the stocks that will be in focus today. Surbhi?
Quite a few result reactions to track today. The first one is Axis Bank reported very strong numbers. The NII growth came in at 10.4% sequentially, the best in 26 quarters. CASA ratio came in at 46.2%, highest in 4 years. Bajaj Finance, the numbers were pretty much in line with estimates. The new loans declined sharply on a sequential basis. AUM saw a growth on a year-on-year basis. It was the best in 11 quarters. ITC, all segments did well on both revenue and EBIT front. Cigarette volumes came in at 20% versus a poll of just 14 to 15%. Tata Consumer Products, again, largely in line with expectations. Revenue came in at 3,363 crores and EBITDA at 434 crores. United Breweries, revenue misses poll estimates, but EBITDA was up 32% on a year-on-year basis and the PAT was up 68%. Shriram Transport Finance, highest ever quarterly dispersals. Dispersals were up 20% on a year-on-year basis. Aarti Drugs, this saw strong revenue growth. The margins were, however, flat sequentially and weak on a year-on-year basis. Dixon Tech, the revenue was up 38% and the EBITDA was up 33% at 146 crores. Lastly, Yes Bank, the CCI, Competition Commission of India, approves Carlyle and Advin's acquisition of up to 10% stake each in Yes Bank. A lot of results to track today. Of course, HDFC Life, SBI Life, HUL and Reliance.
Okay, that is a long list of stocks that will be in focus. Surbhi, thank you so much for that. And finally, let's go across to Mangalam, joining in with all the cues from the F&O space this morning. Hey, Mangalam.
Good morning. So, yesterday was a good day of trade. That's primarily because we started week on week global cues, and after that, we recovered from lows. And there were three factors that really led to that recovery. One, towards the end of the trading session, we saw the rupee strengthen from previous days' lows. Secondly, it was weekly options expiry. So, positions were made towards the Nifty expiry closer to that 17,500 mark. Above that, we saw some short covering. And thirdly, because the rupee is strengthening, we also saw the FIIs buy in cash market after 3-4 sessions of selling. So yesterday, they bought almost 1,865 odd crores. The FIIs and DIIs reversed their roles and the net inflows were still about 1,000 crores positive. But the FIIs sold in index futures as well. In fact, they added around 22,000 shorts as against 3,000 longs. And that's because at higher levels, we've been seeing some resistances. In fact, the FII shorts are now 73% as against 70%. And if you just take a look at the last couple of days, levels closer to that 17,600 is where we're facing a fair amount of resistance. 17,608 on October 19th and 17,584 yesterday itself. The SGX Nifty is indicating a start around that 50-day moving average. The question is whether this dip will be bought into or not. Because, over the last 3 trading sessions, dips towards 17,400 to 17,450 are being bought into, and that has been the lows of the last 3 trading sessions as well. What could support the index today? We have ITC and Axis Bank, both weighty stocks on the Nifty as well as the Nifty Bank, and both of them come up with good results. And post-close today, we have Reliance and HUL, and we are looking at a 3-day weekend as well. So there could be some pre-positioning in these stocks as well. So short point, levels closer to that 17,400 are support, and levels closer to that 17,600 could be a bit of a congestion.
Hi, welcome back. You're still tuned into Power Breakfast on CNBC-TV18. A lot of stocks in the Nifty pack that will be in focus today. Let's start with Axis Bank, which reported a very strong second quarter with net interest margin and net interest income coming in at 26-quarter highs. Abhishek is here to tell us more.
Well, it's a robust set of numbers coming in from Axis Bank. Across parameters, it's a beat. So net interest margin is at 26-quarter high at about 3.96%. This compares to CLSA estimate of 3.71% for the quarter. So net interest income growth of 10.4% quarter-on-quarter is perhaps the best in 26 quarters. And the YOY growth rate of more than 31% is the best in 25 quarters. The return ratios are robust, best in 7 years, both ROA and ROE. ROA coming in at 1.8% an ROE of around 18.5%. Gross NPA ratio X of Q2 FY21, wherein the RBI dispensation was there. Asset quality is one of the best that you are seeing in last 4 to 5 years. So CASA ratio at 46.2% is perhaps the best in last 4 years. Operating profit growth is pretty robust at 30% YOY, one of the best in last 3 to 4 years, and also sequentially is the best in last 15 quarters. The cost to income ratio or the operating efficiency is one of the best in last 5 quarters, and also the fact that asset quality, stress assets have come down for the bank, which augured well for the results this time around. What has not worked in the result is the deposit momentum at just 10.1% YOY. It's one of the lowest deposit growth that you are seeing in last 6 quarters. So both in terms of NI and PAT, it's a beat on our poll. Back to you.
Okay, that is about Axis Bank, but ITC too reported a strong quarter with cigarette volume growth coming in at 20%. Mangam, tell us more about the numbers.
Well, they were smoking hot, as one would say, for ITC as well, and all cylinders fired for the company. But importantly, the cigarette business was the one that was the one which led the performance. Let's talk about the basic numbers first. Revenues above that 16,100 crores. The street was working with a number just similar to that. The EBITDA came in at 5865 crores. The street was working with a number of just around 5600 crores. So there was a beat out there, and the net profit came in closer to 4500 crores as against street expectations of 4400 crores. Let's take a look at all the segments then. The cigarette business showed a revenue growth of 23%. The street was bracing for a revenue growth of anywhere between 16 to 18%. So that's one beat. FMCG revenues grew 21%. The street was working with just 10 to 12%. So that's another beat. Hotels came in line with expectations at the lower end. Actually, 80 to 100% was the street expectations. 82% is where the revenue grew. Agri, again, a mild beat, 44% as against 30 to 35% expectations. And the paper business also grew at around 25%. So all of that meant that overall there was a beat. Let's talk about the cigarette volumes itself. 20% volume growth in the company's cigarette business, and that was much above street expectations of mid-teens sort of growth. And the other heartening fact was that, despite the inflation, the FMCG margins, which were expected to stay stable, have stayed stable year on year and have improved quarter on quarter. On an EBITDA basis, it's a 170 basis points improvement. So all of this means that the stock, which was a star of 2022 so far, up almost 57%, still trades at around 21 times at a discount to all the other FMCG peers, may continue to do well and may perhaps also hit a fresh high in today's trading session.
Welcome back. You're still tuned into Power Breakfast on CNBC-TV18. It's time to talk commodities now. Manisha Gupta is joining us with all the update from that space. Hey, Manisha, good morning.
Morning, Sonal. Thank you for that. And we are looking at a weekly gain when it comes to the crude oil prices, with China stating that they will ease strict COVID restrictions. That clearly seems to have supported many of these commodities. And then for the crude oil prices, it also is about the concerns of a European Union ban on Russian oil and products. OPEC plus additional cuts will also come into play from 1st of November, so the market's preparing for that as well. So we are looking at the crude oil prices holding on to their gains. For the metal prices also, the overnight markets were quite strong. Copper prices trimmed their losses, especially after a statement from Trafigura warning of a global copper shortage going forward. The International Copper Study Group also says that the markets are looking at 300,000 tons of copper shortage in this year. Good gains is what we saw for aluminum also, 2.5% of gains overnight for that, as inventories have declined by 18% in this week. So whether it was energy or metals, overnight markets clearly were quite strong.
Okay, all right. Overnight markets strong, but that is not something we can say for the global equity markets. But Manisha, thank you so much for all that update from the commodity markets. But let's also listen to what Francisco Blanc of Bank of America had to say on the oil price trajectory going forward.
For the first time, we're saying the White House talk about refilling the Strategic Petroleum Reserve. And I think that's what's important in that announcement, is that now the U.S. government, in a way, is also coming up with measures to support the oil price. And about a month ago, we put out a piece entitled 80 is the new 60 for oil. And the argument there is that now you have OPEC likely set up to cut production aggressively on the back of any weakness in prices. But also now we have the U.S. government arguing that if prices do drop to the $70 or so range, we are going to see purchases to refill that strategic reserves.
All right, that's all about the commodity markets. But quickly taking a look at what the Asian markets are doing, we have seen some weakness in the European markets. US markets were under pressure, second consecutive day of losses there. And now the Hang Seng has also slipped into the red. So when we started the show, it was up around 0.2%, and now it's down 0.3%. So that's a sharp fall from the highs. We are seeing the Taiwanese index has extended the losses. So that one is down 0.5% across the board. Their selling is what we are seeing. It's only Shanghai now in the Asia Pac, which is doing well, but SGX Nifty, that one is actually cut down some of those losses. So it's absolutely flat. When we started the show, it was down 25 points. Let's see which way things go, because these are two different cues that we are getting from the Asian markets and the rate that the SGX Nifty is indicating as of now. But of course, the other big cue that the market will be watching out for today is Reliance Industries, due to release its second quarter numbers later today. Sonia is standing by with the key expectations.
Well, it's expected to be a weak showing from Reliance in the quarter gone by. In fact, it's reflected in the stock as well. Take a look at the stock movement. It's down 13% from the highs that we saw in the month of April. That's primarily because of the weakness in the oil to chemicals segment. And that's the key expectation this time around. The oil to chemicals segment will be under quite a bit of pressure, followed by a big decline in the refining margins and sustained weakness for the petchem business. But all of this will be compensated by strong growth in the consumer-facing businesses, both in retail as well as in Geo. Let me take you through the key numbers this time around. Now, on a sequential basis, although the revenues will rise by about 5% to 2.3 lakh crores, the problem really arises in the EBITDA performance. A 14% downtick on a quarter-on-quarter basis is what we're expecting, while the margins as well will fall to 14% versus 17.5% last quarter, and the profits could see a dip of around 12.5% as well. That's primarily because of the lower oil to chemicals segment performance this time around. There's been a sharp decline in refining margins. In fact, Nomura put out a note where they say that the gross refining margins could fall to $11 a barrel compared to $18 in Q1 of FY23, as well as $12.8 in Q4 of FY22. Now, the windfall fuel export tax and lower product cracks will also be hitting the earnings this time around. And in the petchem segment, as we know, there's been weak demand since the start of the year, and that has hit the earnings performance. However, on the flip side, the consumer-facing businesses have done quite well. In fact, the Geo business will see an improvement in its revenues as well as in its EBITDA performance. The revenue growth will be about 22.5% on a year-on-year basis, and this is the third consecutive quarter that they're sustaining revenue growth above 20% year-on-year. Not just that, the EBITDA will rise quarter-on-quarter as well, and there is an expectation that the average revenue per user for Geo will improve to around 180 rupees versus 175.7 same time last quarter. In fact, the retail business as well has been on a very strong footing, and now together the share of the consumer business in the segment EBITDA has risen to 49%. So to summarize it, oil to chemicals will be weak, but the consumer-facing businesses will do well this time.
Okay, a big number to watch out for. But with that, we have completely run out of time on this edition of Power Breakfast. Stay tuned. Bazaar Morning Call comes up next.